please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening and thanks for joining us on What's Hot. I'm Kritika Saxena. Here at the top for you this payout to parent Suzuki Newtons in the third quarter. 4 states refused to screen the movie fearing vandalism and arson. Police detained some Rajput leaders and take them into preventive custody. Well, those were the top stories this evening, but let's head straight across to Shereen Bhan in Davos, who has the chairman of Pharma for a rare interview.
Continuing our coverage here from the World Economic Forum in Davos, and joining us now is the chairman of Pharma, Israel Makov. Appreciate you joining us here on CNBC TV18. Let me start by asking you about President Trump. He has just arrived in Davos. He is going to be speaking tomorrow. As a business leader, what's the expectation from him?
Look, I'm a chairman of Sun, not chairman of the statement of any U.S. government officers, so I don't want to make to try to guess what Mr. Trump is going to say, but I'm sure that he's going to say important things.
That very politically correct. Let me then ask you about what's happening as far as the pharma business is concerned, specifically the generic business. We've seen the largest number of approvals coming in from the US FDA for generics in 2017. I believe the largest in US history. It has put a lot of pressure on pricing. Is it expected to get worse?
No, I don't think so. First of all, let's put it right. For many years, the industry was complaining that the FDA is very slow in approving products. Now the FDA is approving. Now, so there is temporarily there is a flood of approvals. There is more intense competition. And the generic industry is going into a business cycle. It's always go into a business cycle. One it's a little bit down, one it's a little bit up. But the generic industry is going to stay there. It's not something that is going to disappear. It's a very important component of the healthcare industry. Without generics, the healthcare industry cannot really meet the price tag.
But given the fact that you expect more competition and more competitive pressure, what is that going to mean in terms of business for Sun? I mean, the US is your largest market.
Yes, first of all, it's the largest market, but we are gaining foot and gaining market share in other markets. Take emerging markets and other markets, and we have to be better. We have to compete. We have to do things in a better way. We will compete, and we will survive it. It's not something that is risking us. And we are ready to do it, and we are doing it.
As you said that you're ready to brace the competition, but just from an investor's perspective, what does it do in the long term to the margins for a business like yours?
First of all, I don't think that this business cycle is going to be very long. I don't think so. And therefore, the long term, Sun is going to provide a very nice return to its investors, like it did for many, many years. And what we do, we also change in recent years. We add to our portfolio specialties.
Yes.
And we invest a lot in specialty products where the competition is a different type of competition. And they can provide much better margins and satisfy the shareholders.
You preempted my question because that's exactly what I was going to ask you about, the focus on the specialty side of the business and building out that portfolio. What can we expect in the near term?
The near term, we expect to invest more in building up our specialty portfolio. We are going also to get sales, to increase sales, but it's not going to be over months, it's going to be over years. It's a slow process, it's not a fast process, but I think that in 2020, significant, the specialties will compromise a significant part of our sales.
Can you quantify that for us in any broad term?
No.
Okay, but
It will be much more significant than it is today.
Speaking of the competitive landscape, and we are given to understand that there's a fair amount of pharma assets that are on the block. Is the acquisition route something that you're looking at this point in time? Anything that's looking interesting to you?
First of all, we are looking at acquisitions all the time. It's not because not just now. But we are not looking for huge acquisitions. We are looking for acquisitions that will give us really added value. And added value is by acquisitions of products, products that has potential to grow, or companies that have products that has potential to grow. And this is another class of potential acquisition. This is an emerging market where we want to get a better leadership position.
So would it be fair then to say that priority areas when it comes to acquisition or acquisition strategy will be a large chunk of it to be able to gain market share in the emerging markets?
No, I didn't say that.
No.
I said that this is one part of our search for acquisitions. And another part is, as I say, is to get the products and added value of the products. And acquisition is not something that you make a decision. Next month I'm going to make an acquisition. This is not going to happen. We have very patience. We are not under any pressure. We are going to select and choose the acquisition that really are suitable to us and giving the best ROI in our terms.
Anything that's looking interesting that's on your radar currently from an acquisition perspective?
Of course, of course.
From a product perspective, are there any gaps that you would like to plug in your portfolio which you could do inorganically?
No, first of all, we are doing a lot in organically. If you look at our R&D, we expanded our R&D investment in the last few years quite a bit. And this is for specialty products, and this is for complex products. So we have quite a large R&D and quite a good R&D and quite an innovative R&D, and we have a lot of organic growth, but we also acquire products, because this is you can't develop everything, and we want to get a critical mass of product in specialty.
Since you spoke of investing on the specialty side of the business, can we expect significant uptick as far as your R&D investments are concerned, your R&D spends are concerned?
We have already increased our R&D expenditures in the last 3 years, and it's going to we are going to continue to stay at the level that is needed to meet our needed. I'm not giving you a guidance about R&D. I'm just telling you that we are going to keep the R&D in a capacity that is required to achieve our goals.
One of the other issues, at least that the Indian pharmaceutical industry is grappling with, is issues related to the US FDA, regulatory issues. Significant number of warning letters and so on and so forth from the US FDA have come in 2016 and 2017 to Indian pharma companies, including, for instance, your Halol plant. What do you believe is the reason for why we're seeing so many so much regulatory action from the FDA when it comes to Indian pharma?
Well, first of all, FDA is making inspection not only in Indian pharma. They're making all over the place, and they're making and they're taking steps, to correct things, not only in India. I think that they made a few inspections in India. They found things that need to be remedied, and for example, Halol, found a few things that we have remediated, and we are now expecting them to come whenever they are ready to come, and I'm sure that we are in a good shape. So, and this will be true probably to other. I cannot talk for other companies.
As you said, the remediation process you've gone through with that, but you're waiting for the reinspection. Any timelines, expected timelines on when that could happen?
I don't think that I can say, because the FDA is taking their own timeline. They are making their own decisions. We are not speaking on that.
So what is?
We invited them to come over.
You have invited them to come. What is the outlook for India at this point in time? We talked about some of the pressures that you're facing in the US, but what about other markets, and what about India?
Well, I think that our business in the emerging markets is growing. In India, we are by far the leading pharmaceutical company, and we keep and protect our position as the leader, as not only as in general, but almost in every medical segment. I think that the macro variables for India looks positive. Therefore, we expect continuous growth in India. There will be more people that will come into the economic circle and will get treatment. And I think that there is actually quite a positive look for the pharmaceutical market in India as a whole.
So in 2018, what is it that you're going to be watching out for, the key risks as well as the opportunities for your business?
Both.
Specifically, if what would be the top risks, top opportunities?
No, I'm not.
You're not going to tell me?
I'm not going to tell me to everything, you know. We'll keep something for the next interview, you know,
All
something.
right.
Okay.
All right, Mr. Makov, it's been an absolute pleasure. Thank you so much for joining us here on CNBC TV18. We appreciate your time and thank you for sharing your insights with us.
Thank you very much.
Well, Israel Makov, the chairman of Sun Pharma, joining us here from the World Economic Forum at Davos. Back to you.
All right, Shereen, thanks for joining in. With that, we will have lots more action from the World Economic Forum. In fact, the Prime Minister Modi provided the opening act at Davos, and the closing act will come from the US President Donald Trump. Now, he has arrived at the World Economic Forum. Trump's trip was delayed due to the US government shutdown, and he left Washington soon after a deal was finalized to reopen the government. Trump's visit comes at a time when protectionist policies, including some of his, are facing a backlash at the World Economic Forum. Prime Minister Narendra Modi equated protectionism to terrorism in his opening day speech at Davos. White House has said that Trump will attempt to explain how his America First policy is good for the world. In fact, Shereen reports from Davos on Donald Trump's schedule and what his speech could entail. Let's go back across to Shereen. Shereen, what's the sense that you are picking up?
Well, at the start of the World Economic Forum, the focus was on Prime Minister Narendra Modi, and at the close, it's going to be on President Donald Trump, who has now arrived in Davos. He has a packed schedule ahead of him for this evening. He speaks only tomorrow, but today he's hosting two bilateral meetings, one with the UK Prime Minister Theresa May and the other with the Prime Minister of Israel, Benjamin Netanyahu. He will then meet with Klaus Schwab, the founder of the World Economic Forum. Klaus Schwab is hosting a reception for the president, which will be attended by global business leaders. President Trump will speak tomorrow. We've been trying to assess the mood here. Business leaders very hesitant to gauge or in fact share with us what their expectations are, because the unexpected is always expected from President Donald Trump. But they hope that he will send out a message that America continues to be open for business, that America continues to believe in free and fair trade, and that it is not going to move more towards protectionism in the guise of America First. That is at least the hope and the expectation from President Trump's address here at the World Economic Forum in Davos. Remember, we've got a big CNBC exclusive coming up, an exclusive interview with President Trump. Joe Kernan from CNBC will be speaking with him, so do stay tuned. We'll get you all the action right here. For now, it's back to you.
Okay, Shereen, thanks, Valva. We'll keep coming back to you for all the updates. But in fact, Trump just held a one-on-one meeting with the British Prime Minister Theresa May just a few weeks ago. Remember, Trump had lashed out at Theresa May on Twitter after she had criticized some of his tweets supporting far-right groups in the United Kingdom. Trump endorsed some anti-Muslim views in those tweets and gave a stinging rebuke to Theresa May's criticism. Trump tweeted back then, and I quote, "Theresa May, don't focus on me, focus on the destructive radical Islamic terrorism that is taking place within the United Kingdom. We are doing just fine." Today, he attempted to break the ice with this statement after meeting Theresa May.
Had a great discussion. We're on the same wavelength in, I think, every respect. The Prime Minister and myself have had a really great relationship, although some people don't necessarily believe that, but I can tell you it's true. I have a tremendous respect for the Prime Minister and the job she's doing, and I think the feeling is mutual from the standpoint of liking each other a lot. And so that was a little bit of a false rumor out there. I just wanted to correct it, frankly, because we have great respect for everything you're doing. And we love your country. We think it's truly good. And we're working on transactions in terms of economic development, trade, maybe most importantly, military. We are very much joined at the hip when it comes to the military.
Okay, so Theresa May and Trump are joined at the hip when it comes to military action. But speaking about Trump's address at Davos tomorrow, we spoke to Johan Orrick of AT Kearney and Paul Sheard of S&P Global. While Johan Orrick believes that Trump will be defending his protectionism rhetoric, Paul, meanwhile, said that this is an excellent opportunity for President Trump to quell some of the concerns that his stance on protectionism have raised. Listen in.
The question is,
yes,
is he going to be, of course he needs to defend his agenda, make America great, there's no doubt about it, and I'm sure he will do that, but there are different ways of doing that. There are ways of doing that, hey, doing that is good for the world and will be reasonable and will remain open and etc. Or is it going to be protectionist measures, shutting doors and building walls? What is it? The indication earlier in the week was with the 2 protectionist measures for solar panels, among
and
others,
washing machines,
and washing machines. That was not a good sign, and people talked about that. So people are worried, to be honest. But let's see.
I think if this is an opportunity for President Trump to actually, in some sense, speak directly to a rather probably skeptical Davos crowd, but I think it would be interesting to see whether he can communicate directly to the Davos elites, so to speak, exactly what Make America Great Again, America First means. And really, it would be interesting if he could explain that in a way that perhaps soothed some of the concerns of this audience. In other words, that made it clear that these 2 things maybe are more consistent than would appear, again, on that surface rhetoric.
Okay, so perhaps tomorrow we'll have some clarity on what exactly Donald Trump has in mind when it comes to the America First policy and what he'll put forth to the world in the World Economic Forum. For now, we'll take a quick break. Up next, declining for the 2 straight months. Gst collections pick up in December, touched nearly 87,000 crore rupees at a growth rate of 7% over November. Details on the other side. Don't go anywhere. Welcome back. After 2 months of decline, Gst collections in the month of December have shown an uptick. Now, the government collected close to 87,000 crore rupees in the month of December. This, according to data available till yesterday. This would come as a huge relief for the government, who had seen its GST mop-up decline to an all-time low in November. Now, this could be attributed to sharp cuts in GST on close to 200 items in November. The Finance Ministry, in its statement, also said that around 1 crore taxpayers have registered under the GST regime till yesterday. Around 17 lakh of them are composition dealers who are required to file their return every single quarter. We in fact reached out to GST Council members to get a sense of what the improvement in GST collections meant to them and how much more it can be scaled up. Kerala's Finance Minister Thomas Isaac said that he was pleasantly surprised by the December GST collections, as he had expected to see a decline. We also spoke to the GST Council member from Goa, Marvin Goodinho, and he cautioned us that the government will continue to incur losses until the GST collections touch 1 lakh crore rupees per month.
I'm pleasantly surprised.
Okay.
Because I was thinking the collection would go down further. Because falling back to the reduction of 28%, commodities was going to be felt during this month. And this means that either the tax base has widened or certain sectors' compliance have improved.
I'm not surprised. I have always been maintaining that with a few glitches that were there, once we smoothen the ends, rough ends, revenue is bound to pick up. I think the shortfall after what we have broadly noted would be in the region until we touch about 1 lakh in a month.
Okay.
There is bound to be some shortfall, so which I expect it to pick up once the e-way bill gets working fully.
Moving on then to the big corporate story of the day, India's largest car maker Maruti Suzuki reported a stable set of numbers in the third quarter. Profit showed a marginal improvement but did not meet street expectations. Revenue and margins, meanwhile, were in line with expectations. Maruti's revenue came in at 14% higher compared to the same quarter last year. But here's the big point that stood out from Maruti earnings. The Maruti board also decided to revise its royalty payment contours with parent Suzuki. If approved by the Suzuki board going forward, Maruti will have to pay lower royalties on the launch of new models. Ronojoy Banerjee is here to put this into perspective. Ron, this is something that Maruti was facing pressure from domestic auto manufacturers for quite some time now. How will they work this out, and by when will this start flowing into numbers?
Well, remember, Maruti has come under immense amount of pressure, both from the government as well as from some of the domestic automakers, because there's a view within them that that Maruti is perhaps paying too much royalty to its parent Suzuki. As a result of which, today Maruti's board has decided that they will be reworking the royalty agreement. Let me take you through the exact wording of the press statement. It says that the board has discussed and approved a revision in the method of calculating royalty, which would result in lower royalty payments for new models, starting with the Ignis. However, the statement also says that this would be implemented only after they have approval from Suzuki Motor Corporation Japan. Now, what this methodology is, the statement is silent on that. We understand that the details will only come out once SMC Japan approves this. To me, this looks like a smart move by Maruti to preempt any government action. As I said, there has been some concerns within the government that Maruti is paying too much royalty to Suzuki. In 2009, the royalty cap, which was 5% of the net sales, had been taken away. Currently, Maruti's royalty that they are paying to Suzuki is about 6%, or a little over 6%. At least that is what the numbers was for the previous quarter, second quarter. So we'll of course have to wait and watch whether this decision of Maruti has any bearing on the committee that has been set up within the government of India to look into the royalty issue.
Okay, Ron, so a lot of gaps still to be understood, but yes, once that does work out, that is going to be a significant positive. And as we have been pointing all day today, that is a stock to watch out for once the markets open on Monday. But with that, it's a wrap on this edition of What's Hot. Good night and thanks for watching. But coming up next, Taking Stock will take all the market action that transpired through the week and today ahead on the other side of this very short break. Stay tuned for that, and in 30 minutes, we'll be back with the top stories of the day and all the action from the World Economic Forum with India Business Hour.